You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is 12 p.m. Central, 1 p.m. Eastern. Yes, it is time once again for the old Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Reminding you, if you like what you hear for this program, for everything we put out there for you guys throughout the week, make sure you leave those reviews on wherever you get this fine program so other folks can continue to discover this program. Keep those questions and comments coming too. We do love to hear from you guys. Also want to remind you this program also brought to you by Matrix Executions LLC, an agency broker dealer focused on best X and trading workflow automation. A tech-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, please visit matrixexecutions.com. And let's see who else we're joined by on the old program today. First, let's go out to the quiet volatility mecca known as Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital, holding down the old MIAX hot seat this week. Mr. Rock Lobster, welcome back to the program, sir.
It's good to be back in the volatility. I guess you're the volatility recording number one volatility recording show, something like that. How large the network is?
That's a strange way to put it, but okay, we are the number one volatility recording show. Yes. I like that. I'm going to put that on the headline of our website now and everywhere else. The number one volatility recording show. Yes, that's us. Have been that for, the better part of a decade or so, at least on the Vol Views front. Other stuff a lot longer, going back to 2007. Nice to see that the Rock Lobster is finally grokking on to all that good stuff. And also joining us, holding down the Matrix hot seat this week, our old friend in the network, Mr. Henry Schwartz, a.k.a. the Flow Master, a.k.a. the founder over there at Trade Alert. Mr. Flowmaster, welcome back to Volatility Views, sir.
Thank you, Mark. Happy to be here. And it's always better to be number one than number two. So I just go with it.
I don't even know who the number 2 volatility recording show, whatever he said, would be, but it'd be good to look into that and find that. By the way, Mr. Flowmaster, in honor of your infrequent appearance here on the program, we went out of our way to use as much Trade Alert data as humanly possible to construct the show. So hopefully that gives you a warm fuzzy, sir.
That is awesome. I'm glad to hear it.
All right. You check it out for yourselves, listeners, tradealert.com, if you want to kick the tires for yourselves as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we break down what the heck is going on from a vol trading and trending and unusual activity and all sorts of other fun perspectives. All right. A little bit of a green end to the week here. Another day that ends in Y, another day of horrific totals on the virus scene. Of course, that means a little bit of green on the old screen. We've done this once or twice or 8 million times out here, and yet it's happening yet again today. Most of the major indices firmly in the green. S&P up about 0.2%. NASDAQ up a similar percentage, and Dow up a similar percentage as well, a little north of 0.5% out there. So, but still, most of them firmly in the green yet again out there today. So a lot of fun stuff popping off out there. Of course, we've been off for a couple of weeks. We were off last week because of the Thanksgiving holiday here in the U.S. So a couple of weeks since our last show. Spikes come into showtime. Was that about a 21.5? That puts it down not quite 2 points, about 1 3/4 points from this time last show. VIX cash at about a 20 3/4. It puts it down about 1 3/4 points exactly as well. So a rare time where both VIX cash and spikes moving the exact same distance show to show. And our old friend VVIX coming in a bit as well, is at about a 105 coming into showtime. Puts it down a little over 6, about 6.5 handles from last show. So vol coming in, and vol itself getting less frothy, less volatile pretty much across the board. Let's go on out now to the old Matrix hot seat, to our guest, the Flowmaster. Mr. Schwartz, sir, obviously a lot going on in the world of options, a lot going on post-election from a vol perspective as well. What is lighting up your tape over there at Trade Alert this week, sir?
Well, it's been a pretty wild compression of vol since the election. I mean, we're seeing levels now. VIX is still in the in the mid 20s, but if you look at that at the money vol in the S&P, we're back down to 16, 17, out a few months. This is really. I mean, we had some quiet periods in August as well, but we're pretty much kind of punching through those. And kind of, I know it doesn't feel like a normal world, but and to the options markets, it's kind of behaving like one. The realized vol and implied vol is come back down to earth. So that's kind of wild. And then just watching this volume, the November average daily volume was 33 million contracts a day, which is just mind blowing. And I can't tell you how many phone calls I've answered, talking about where this volume's coming from and the retail participation. That's the story of the year by far. I mean, millions and millions of contracts a day in the form of tiny trades coming from, the brokerage platforms that are out there, and people, I believe, working at home and trading all day long.
That certainly does seem to be the nugget. I know the last time you chatted, it was back on our election night special. At the time, you were talking about this explosion of what you termed the one lots, the 1 million one lots that are hitting the market these days that didn't even exist a year ago. You also looked at a little bit of some interesting one lots going up in a product you probably wouldn't expect, which is the SPX, which is notoriously a size institutional product. But it seemed like it seemed like the one lots were maybe even creeping in there. But I know you wanted to do some more digging before you spoke on it any further. Have you had a chance to dig into that anymore since our last chat, Mr. Flowmaster? And if so, what have you found?
I did dig a little bit, and there is a kind of a consistent 60, 70,000 contracts a day trading in SPX that are one-lot trades compared to about 15,000 a couple of years ago. And I asked a few professionals, I asked a few people within the exchange, is this algos? Is something new going on here? And the answer I got was it looks like it's the same kind of activity we're seeing in NEO and Tesla. It's coming from retail platforms. So it's really interesting. I mean, obviously those products, they're in some ways they're simpler, right? European, index options, are actually easier in some situations, but the notional value is a lot higher. So it takes, people have to understand how those products work. But it looks like there's a decent chunk of the retail that's also playing around in the indexes.
So what you're saying is that your grandmother and everyone's grandmother is literally trading SPXers. Is that what you're saying?
There seems to be a handful of grandmas that are playing the index.
Some size grandmas out there. Your literal aunt from Iowa trading one lots out there in the S. If you had told me that when I was standing out in the S all those years ago, I would have laughed at you and called you a madman, but then I never would have predicted many of the things that unfolded here in the year that is 2020, the year that just keeps on giving from a gift perspective. Let's go on now to the volatility fortress, the GIOVINAZZI compound. Don't try to get in there, listeners. It's sealed. There are gunners on the walls out there. He was social distancing before it was cool. But that allows him time to swap into his alter ego known as Volman. Mr. Volman, sir, what is on your radar this week?
Well, I think Henry made a good point about the vol coming back to earth. Realized vol in the S&P 500 is about 13%, 13.5% 10-day vol, which is, I believe, as low as it's been all year since pre-COVIDness. Pretty low 10-day vol. However, the June VIX contract is like 24%. So there's a big, as they say in Maine, you can't get there from here. It's a long way down. It's a long way down from where that Jan future is to realized vol. So I don't think we're seeing a 14 vol VIX anytime soon. There's a lot that goes into VIX that bakes the number up a little higher and how it's calculated. But I mean, ultimately, it's still a force, and the force is, liquidity providers have to figure out a way to pay the bills, and if at the money vol is too high and they keep buying it, they're going to find a way to, move things. So. And I mean, not very long ago, we were 3,200 S&P 500, and we are closing on 3,700. It looks like we might get there today because it's a day with the Y. So that's a pretty solid pop in the S&P 500, no doubt about it. But normally, when we see the market this high, we see a lower vol. We just don't. This is the realized vol has been a little lower this year. We actually got into the single digits for a while. And that was right before we had that whole NASDAQ apocalypse thing happening in, August, September timeframe or something like there. So I think, we're on our way. But this is the lowest implied vol number we've had in the COVID era. So all this talk about, we've got an election that seems to be over, and we have some vaccines that should be coming out. I think one big kick will be the FDA here if they're going to just approve them. I think that's another thing that we're waiting on, and stimulus, another thing, I guess, so again, still stuff to keep the vol up there, but January futures still pretty high, but another thing is what makes VIX move lower between now and, let's say, the Georgia runoff. I don't know. I don't think we're going to see a lot of action in it. I think there's a lot of action in a lot of stocks, but I don't think we're going to see a lot of action in VIX. So it'll probably hang out at this level until till that runoff is over. So we still have another 20 days of, I think, maybe not very much excitement unless people embrace whatever the FDA does next week with Pfizer and all that other stuff.
Well, where there is action, as Henry alluded to earlier, it's the overall options market. Broke down the full numbers on the option block yesterday, so I'll kind of just skim them now. There's a couple of points that are salient for this audience. First off, as Henry alluded to, overall volume, just, I think, technical turbines, redonkulous. It's 677.2 million contracts in November, up 71% from November of last year. Everyone who was asking at the beginning of 2019, after we were coming off the heels of that record year that was 2018, saying, oh, can we beat it? Can we beat it? I kept saying, careful what you wish for, because look what it might take to actually get there. And lo and behold, we've seen the year that is 2020, and sometimes what is required to make these numbers, and it ain't great. So just bear that in mind if you're saying, can we beat these numbers in 2021? Maybe it's good for the options business, but collectively for a society, maybe let's hope for a little bit less next year. Of course, we drilled down all the equity options, cleared ETFs, all that good stuff on the show yesterday. But what's interesting and what's salient, I think, for a lot of you out there are the VIX futures. Of course, OCC clears those as well. They're pretty much the only futures left that they clear out there. Total overall VIX futures volume, I should say, for November, 3.5 million contracts, 32.2% decrease from November of last year. So one of the few dark spots in an otherwise banner months. Even index options were up, and they've kind of been languishing of late. But VIX futures can't seem to catch a volume break out there. Obviously, pretty excited, I think, looking forward to the return of some of these ETPs out there to maybe gin up some of that volume. Let's go on out. Since we're talking about volume, let's dive really quickly into the MIAX hot seat yet again. MIAX, another one of the bright spots out there in the overall option space in November. They're kind of the little exchange group that could, except not that little anymore. They're starting to climb up. They have actually surpassed NYSE. Now, NYSE and Amex combined do less volume than MIAX, which is kind of amazing to say that, but that's where we are these days. MIAX putting up 69 million equity options contracts in November. That's an ADV of about 3.4 million contracts and an equity options market share of about 10.8%. By the way, if you're wondering, their volume in 2020 up 85.5% from this time last year. And if you add up total options market share, they're actually at 11.25%, which, as I mentioned, outstrips the NYSE Amex kind of combined entity out there. Only a few other larger exchange groups do more paper. Obviously, CBOE, because they have BATS and everything else in there, and also NASDAQ, because they have about 6 exchanges in there. Both are in the high 20s to low 30s range. But MIAX getting up there, which is interesting. And, of course, if you've been watching the numbers and the press releases, they've announced pretty much almost every day since the last time they were on. One of the reasons why they're not on right now, they're kind of busy out there buying stuff. They completed the acquisition of the Minneapolis Grain Exchange. They announced more investments in Vesica Technologies, a fintech startup. They have a Stratify. They invested in that. So they've kind of been buying and investing across the board. So they'll have a lot to share with us. Hopefully some more info on the Spikes futures when they come back on the show next. Unfortunately, those are still halted, but they do expect those to be back before the end of the year. So hopefully we'll have some interesting nuggets to sink our teeth into out there. Speaking of all things futures, let's get out to the VIX futures out there. Like I mentioned, kind of a weak month for them. And the curve, as the Rock Lobster mentioned, has been an interesting one to watch. Some people have called it frozen. A few other adjectives I've seen thrown around out there on Twitter over the course of the past week. Coming into showtime, we saw that DEES future not that far away from where it was last show, hence the frozen adjective out there. It's about 1.5 points premium to the cash. It's about 1/10 of a point difference than it was 2 weeks ago on our last show. So not a heck of a lot of movement. A little bit more movement on the Jan future. That was about 2.25 points above the cash coming into showtime. That's around 0.75 of a point lower than it was 2 weeks ago. So a little bit of movement in Jan, not so much in Dece. Mr. Rocklopson, we'll start with you. Anything on your radar from an overall VIX term structure perspective? You were just talking about the Jan future, saying, I think your technical term was, we can't get there from here, to be the old school mainer that you are. And then B, are you surprised that VIX futures, in terms of volume-wise, continue to languish out there, sir?
It doesn't surprise me they continue to languish because, the market players kind of know what's going on. They're like, okay, we have an election. VIX isn't going to do crap for the next 2 weeks or 3 weeks, right? People are a lot smarter on all this stuff now than they used to be. And they're like, it's not moving. So if it's not moving, why are we doing anything? We don't care. And I think that's part of the reason. I'm like, I have a very light disposition, but it has been just awful for VIX because I thought, okay, well, yeah, we would definitely get below 20, maybe break to 18. But this whole Georgia runoff thing, nobody won, and it just kind of held everything up. So you can't get much better good news than we've had. Obviously, I think the whole thing with the virus cases spiking, but I think the more they test, the more the people more positive results will be, and so that will always be here. But it seems like things are still functioning, But so I think there's the constant crush of the press on the virus and how catastrophic it is and all this stuff, and I think that's that probably is part of it. The Senate kind of messing around with doling some money out. That's another part. So, I mean, those things could bring vol down. But, I mean, you kind of have the big vol events, and then you're sitting here waiting. So I think that's kind of where we are. We're kind of in the, sit and wait mode. So I think there could be much larger potential moves in January if we have actual vaccines getting distributed and you go from press to reality on the ground on seeing what's happening. And you could see things could kind of get, somewhat back to normal. But for right now, it's, that 20 level it's still, it's right now, we'll just call it the volatility line of death. It just does not want to break that number in 2020, since this COVID was announced, and maybe it won't. It's just we're going to hold the 20 handle until the end of the year. It's only got 26 days to go.
I like that. The volatility line of death, sir. So you're starting to get better at the naming and the descriptions out there, sir. Slowly, over time, I have affected you, I see.
Yes, after 10 years on the show, I'm finally getting the hang of it.
A little bit. It took you a while to get there, but you can't make the horse drink. But eventually, over time, he will probably get thirsty and have to drink on his own. We're also thirsty for the knowledge of the Flow Master. Mr. Flow Master, sir, I know you keep an eye on all things futures out there as well, even though your main purview is all things options. What are your thoughts on the VIX futures? It seems like they continually this year, even though options volume has exploded, the futures continue to languish. If you have any thoughts on that, have at it. And then also, B, what are your thoughts on what we're seeing out there in this? Some people have called it frozen, this strange kind of hovering VIX futures term structure we're seeing, sir.
The frozen line of death. I like it. Yeah, I do watch the VIX futures much more now because we're part of SIBO, and that's where they trade. And especially because they launched these mini VIX futures, which have picked up a surprising amount of volume. And I'm trying to understand what people are using them for. In the overall implied vol, whether it's in futures or just in the term structure, of the S&P, I think it's really an interesting time because, there's a lot of people saying, okay, well, so yeah, things are going to get a little rocky again in the first quarter. That's why the vol, the implieds are higher out there. And then there's a lot of other people saying, no, you know what? There's just no sellers, and there haven't been for a while. And this stuff is kind of fundamentally trading, richer than it should be based on kind of realized vol. And I kind of, at this point, I am hopeful that the world's going to smooth out, soon. And I think you may be in a situation where there's the premium sellers got so whacked in over the past couple of years, and obviously the beginning of this year, to the new all-time high in VIX, that they're out of business, and they've been out of business, and and all this retail flow, is premium buying, right, or at least scalping. Nobody's selling any 6-month options in the retail world. They can't do it, and they probably shouldn't do it. But so I think that there may be an opportunity there, to look at some of these levels, and for people that know what they're doing, take advantage of that. And in terms of the volumes, you're exactly right. The ETPs and some structured products that use the VIX futures disappeared, and it's a long cycle to get new things launched. But I do see you see more and more of these actively managed ETFs and ETPs, every month. And those they're gonna start to dabble in in some vol products. Some of them will, at least. And I think that'll grow. We may not see a triple levered short ever again, but you already see some of the 2x leverage products coming back. So and once people's memories of vol going from 9 to 80 fade, then I think you'll see more people a little bit comfortable with the risk reward of being short vol.
I like that. I miss my old triple levered shorts, Henry. Double levered just ain't going to do it for me. I need to live on the edge, sir. So let me know when they bring back those good old triple levers. Then I could truly cross the volatility line of death. Or what did you put it? The frozen volatility line of death. Either way, a lot to unpack. Let's get on out to the options front. Spikes options, like we said, a lot of people mostly waiting for the futures to come back. So Spikes OI pretty much similar to what it was this time last show. Top positions out here, the D's 80 puts, followed by the D's 28 calls, D's 75 puts, and the Feb 11 calls. So interesting stuff. Like I mentioned, coming to Showtime, Spike's at about a 21.5. So all of these are fairly meaty positions, with the exceptions of the 28s. Those are the only out of the money trade I see on this list, which is fascinating in and of itself. Let's move on out to VIX options now. Kind of a light day, which is emblematic of the theme we've seen. Of course, last week was a truncated holiday week, so not a lot of paper going up then. And today, about 262,000 contracts on the tape as of a few minutes ago. That ADV has also trended down since our last show. It's at about 532,000 contracts. It's down about 70,000 contracts. So that's a lot. It was north of 600K on our last show. Now, again, back down to around the 500K level. But we are, again, in that holiday season. So interesting stuff afoot. Let's see what's interesting out there in the VIX options. Let's break down the top 10 sizable open positions out there in VIX land. Cost you 125,000 contracts to break into the top 10. If you know anything about VIX options, you know that isn't that much. Usually it's a fair bit more to break in, but not so much today. 125,000 contracts. They get you all the way to the Feb 15 puts. Number 9, $1.29 of the D's 25 puts. Pretty much, you're going to hear a lot of puts here, listeners, so brace yourselves. Number 8, 135,000 of the D's 19 puts. Number 7, 140,000 of the Feb 17 puts. Number 6, $1.49 of the D's 21 puts. Number 5, our first and indeed only call in the top 10, listeners. Yes, we are back to that hallowed ground of only one call in the top 10. 166,000 of the Jan 40 calls. Number 4, also $1.66 of the March 17 puts. Our first and only March on the top 10 here today. Number 3, now we're finally over 200K. Took that long to get over 200K, listeners. That gets us to 234,000 of the D's 22 puts, and the rest is just like a D's put strip here. 251,000 for number 2 of the D's 23 puts, and number 1 with a decent size bullet these days, 321,000 of the D's 20 puts. 7.3 million contracts open, about 3.6 million on the calls, and about 3.7 million on the puts. So not only are calls pretty much non-existent in the top 10, of VIX options, listeners, but they also are now outpaced by puts ever so slightly in the overall OI of VIX options as well. Mr. Schwartz, I know you're out there watching all things VIX options these days. Are you surprised that we're back into this relatively rare circumstance where there's only one call in the top 10 of VIX? Usually it's kind of the other way around. And then B, any other interesting trends or trades or developments come across your radar in VIX options land this week, sir?
Well, the put call in VIX, I mean, you go back a few years and, everybody kind of knows VIX calls are similar to SPX puts in terms of the hedge that they provide. So the put call in VIX for years and years never traded above 1. I'm looking at average put calls back to 2015, and it was consistently the put call was around 0.3. So puts just didn't trade very much, and we hit a put call of 1.5 in November, right? So that's a giant shift, and it shows that everybody's. We had our vol event at the beginning of the year, and we had a really high, sticky line of death for the rest of the year. Keeping things in the 20s, but everybody's focused on puts because statistically they expect VIX to continue reverting lower, not spike higher again. So that's a big shift, and I think it's also really interesting because it shows. I think kind of a different understanding of the product. I mean, even in the other spikes that we've had, with the product being around, you didn't see the put call spike as high for as long as we have this year. So it's interesting. I mean, we just saw some big puts rolled, like 20 or 40,000 VIX puts rolled out today. So people are putting these trades on. The VIX, the futures are not quite coming into where they think they're going to get, remember those ginormous 17-21 ratio put spreads. We haven't come down there. Those guys haven't made any money, although because it was a ratio spread, didn't cost them much. But so people are putting on these puts and they're waiting and they're rolling because they do have confidence that eventually we'll be back down below 20. It's just the question is when. And as Andrew said, the way that the vaccine distribution plays out, I think is going to dictate, how things go next year for sure.
Yeah, I mean, this is just fascinating for people who are maybe new to the show. As Henry just pointed out, these are certainly rarefied times we find ourselves in from a use case perspective of VIX. As Henry mentioned, historically it's around a 0.3. It's all calls all the time. So to see only one call in the top 10 and then puts outnumbering calls in the overall OI, these are extremely aberrant scenarios we find ourselves in. Almost as aberrant as your grandmother trading the one lots out there in VIX. Let's see what's trading out here this week. Like we mentioned, 262,000 contracts on the tape out there in VIX options. Let's break down some of the more active trades today. I guess you can probably guess it's a lot of puts, but there are some calls in there as well. The big most active contract today, listeners, 52,000 of the D's 22 puts. So our old friend number 3 in the top 10 size positions. Also number 1 today in our most actives, 52,000. So on a pretty light day, a little north of 250,000 contracts going up. A fifth of that are on those D's 22 puts. So folks liking themselves those D's puts yet again, followed by about 20,000 of the D's 23 puts. Now we get some calls, 17,000 of the D's 50 calls. That's an interesting strike. I want to dig into that a little bit more. 12,000 of the Jan 35s and about 12,000 of the Jan 22 puts. So 2 calls in the most actives out there today. Let's go out to Thursday. Almost 500K on the tape on Thursday. The most active contract, 52,000 yet again. That's kind of the magic number out there for the Jan 19 puts this time. So even farther out there. Then followed by number 2, 50,000. Back to the calls. Jan 50 calls. So the 50 strike is drawing some interest out there both today and yesterday. And also Feb 50 calls, 50,000 of those as well. So maybe a roll, maybe someone just picking up the strike and can't pick a month, so he took both. Either way, 50K, both of those trading yesterday. So 100,000 contracts trading in 50 calls yesterday in Jan and Feb. That's interesting. Followed by 50,000 as well of the Feb 19 puts. Maybe our old friend, the old bullish risk reversal. Maybe a collar. That'd be a weird strike for the collar. That was the case, but I've seen weirder things. And then about 34,000 of the D's 20 puts going up yesterday. Wednesday, 410,000 contracts on the tape. Once again, about 53,000 for the most active contract. Gets us once again to the 19 strike, this time the D's 19 put. So similar strikes, different months dominating our most actives here every day. Followed by 30K of the Jan 18 calls and 30K as well of the Jan 19 calls, 30K, going out to April, of the April 30 calls and 30K as well of the April 60s. So maybe some funkiness going on out there with April 30-60, and as well as a bit of maybe of a tight vertical in Jan. Tuesday, the most active day of the week, 729,000 on the day, so close to 1 million out there, the closest we've gotten all week. And 56,000 was the most active contract. That was the D's 21 put this time. Again, puts leading the dance out here. 52, almost 53,000 of the Jan. 47 half calls, not quite 50. They ticked down a little bit to 47 halves. 52, almost 53,000 of the, going out to May now, May 42 halves, our first May on the list. So interesting upside selections here. 32,000 of the Jan 22 puts, and round out the top five here, 28,000 of the Jan 35 calls. So there were some calls trading this week, listeners, just not enough to really break into the top 10 most actives or size positions. And then Monday, the light day, 291,000 contracts. The most active, yet again, 43,000 of the D's 23 puts, followed by 27,000 of the Jan 24 puts, 13K of the D's 25 calls, 10K even of the D's 65s. Yes, 6-5 listeners. And then 10,000 of the March 20 puts. Mr. Rock Lobster, a.k.a. Volman. I know you crazies in the pit chat like to sling a few VIX options every now and then. Hey, what are your thoughts on what we were just talking about with Henry here? Just the somewhat historic nature of what we're seeing out there in terms of no call love, really, in VIX. And then B, any thoughts on some of these funky trades we're seeing going up here on the 50 strike and the put palooza that was trading this week in VIX options, sir?
Well, you know what's funny is that the put palooza, I think people are they're looking for the vol to drop, right? I mean, this vaccine and vaccine distribution, and there's still questions, and there's all these COVID cases, but I think at least the market seems to understand that there's probably a lot more COVID people with it that are unreported numbers. So one thing you've noticed, like even as they're reporting all this spike in numbers, stocks keep going up. I mean, I don't know if everybody's just lost their minds or they're like, whatever, or people are punch drunk. So the fact that they're buying more VIX puts now, I think is okay. Hey, because these events keep taking the ball down, I think people are getting smarter. And I mean, and another part of the problem is I think, long VIX calls and long SPY kind of make a good sort of, ball back spread sometimes. And maybe those call buyers just don't need to be around, they don't need to buy them anymore, or they've made so much money on their SPY. I mean, 12, what do we have? 400 handles in a month in SPX. Like you made so much money that you're like, I don't even care anymore. So I think from that point of view, people aren't buying the calls up here because they just don't think they need them. Like before that, the vaccine news, if you look at kind of the change in vol from that on those, on that news, it was pretty substantial. But now it's at a place where I think one reason why the vol doesn't come in is because we just keep going straight up in one direction and keeps pulling the curve up. So that's where we have VIX. As far as puts, now think about it too, is you can buy all of the December, 2 weeks to go. Well, let's call it a week and a half now, right? But you can buy all the 19 puts you want for 15 cents. Okay, and that is only a point that's a little less than 2 points away. We're only 81 cents from the 19 handle. Like the market is basically saying we ain't going to be a 19 VIX this cycle, even with the potential FDA, even with the potential Senate. They are on these things. So I find that actually the most surprising. And that's what just leads me to believe, we're kind of the last sort of vol hang up is the election, right? Because they're pricing the D cycle different than the Jan cycle, I think. Just from a perception of how low we can go. But either way, the 22 strike is yesterday. The at-the-money strike, I remember, was around $4. And it's starting to leak a little bit. It's down to a little over $3.25. So some of the vol is coming out of it. I think we're hung here. You can buy all the DC-19 puts you want, and it's not. And I don't think it's going to move the needle very much. So there is I guess you could say that's an opportunity, but from a put buying point of view, you still need VIX to go down to make money buying puts. And I do think for this cycle, it does feel we're a little stuck.
We are stuck indeed. You know what's not stuck is good old VXX. It continues to erode week on, week out. Of course, our last show was 2 weeks ago, so it's moved quite a bit since then. Coming into showtime was at about a 17 even. I think it has ticked up a little bit since then, but still it puts it down almost 1.5 handles from our last show 2 weeks ago. Doing all right paper out there today, about 134,000 contracts on the tape. The ADV is 207,000. That's actually down quite a bit from our last show, down about 33,000 contracts. So most of the big products, VIX and VXX and others, taking a bit of a volume hiatus over the holiday weeks here. We'll see if those numbers continue to tick up going forward. Let's see what's trading out there today. The most active contract today are the DEES 17 calls, 5,300, followed by almost the same amount of the DEES 17 put there, and then 5,000 of the DEES 17. Actually, those were the weeklies expiring on the 4th. And then the traditional D17 calls also active today. So folks are very fired up about the 17 strike out there. At least the weeklies make sense because they're going away today, and we're kind of hovering around that strike. But the regular monthly Ds also active. And then the Ds 17 halves going out today as well, December 4th. So a lot of 17 and 17 halves. Again, kind of hard to blame them. That's kind of where we're hovering right now. In terms of the OI, it's actually a different story in VXX than it is in VIX. VIX is pretty much all one direction. It's all puts all the time. VXX, for the first time in a while, is straight 50-50 calls to puts out there, which is kind of interesting. Let's do a quick top 10 out here, and then we're kind of coming up against it. I want to make sure we get you guys on here as well. Number 10, 17,000. That'd be something, 171,000. More than VIX to break into the top 10 of VXX. I don't think we're quite there yet. 17,000 of the Jan 30 calls. Number 9, 17,000 as well. Of the D16 puts. Number 8, about 19K of the Jan 20 puts. Number 8, 19,500 of the Jan 20 calls. Number 6, 19,800 of the Jan 10 puts, so an interesting line in the sand there. Number 5, 20,000 of the DEES 20 calls. Number 4, 22K of the DEES 30 calls. Number 3, 29,000 of the Jan 25 calls. Numero dos here, 29, almost 30,000 of the Jan 18 puts. And the number one size position in VXX right now, 63,000 of the Jan 15 puts. That's an interesting one. That would have seemed outlandish not too long ago. Now it's only a couple of handles away. Total of about 1.6 million open in VXX options right now. 758,000 on the calls and slightly more, 838,000 on the puts. Mr. Flowmaster, is VXX a product you guys watch a lot over there in the land of the flow? And if so, what's on your radar, sir?
I keep an eye on VXX. I know that it's in for a lot of the guys in the pit. Actually, they just kind of like to nibble at VXX. Before the VIX futures were the mini VIX futures were there. Sometimes they would just buy VXX as a hedge, and then once they kind of had enough VXX, they'd sell it to trade into a future. From what I've seen, there are definitely some differences. I mean, you get a little bit of a different audience when it's an ETP. But they're similar products. So overall, you got to kind of have the same configuration of things, just a little bit of a different view on it.
Yeah, it's interesting to see. They nibble at it. Of course, now that everyone's grandmother is literally trading SPX and VIX, maybe they don't have much need. It used to be the retail vehicle for vol. Now they're trading the big dogs. Maybe they don't need VXX anymore. Mr. Rock Lobster, I know you crazies in the pit chat love to sling themselves some VXX. What are your thoughts on what we're seeing out there this week, sir?
I think the thoughts are, has it moved this week? I'm looking I honestly am struggling to find a VXX trade because I don't normally sell calls in it. I just like it when it moves. And right now it's sort of, let's see here. What is the big range for this week? Let's say it started the week at 17.58. It was 17.42 yesterday and is down 30 cents today, but it's trying to work its way back up just a tiny bit. So we've had a grand half a point move in VXX this entire week. And I think the S&P 500 is up 100 points in the meantime. So I like VXX. I like it as a Jan trade. I don't like it as a December trade right now. Just because I don't see a lot of like a compelling risk reward in it because we need those futures to move. And they're stuck and they're up there in the 20s and they're just not in a hurry to get down. So I do like it. The thing I've been trying to is just price some like 16 calendars or some 15 calendars, put calendars, stuff like that. To try to carry us into January and see if I can just make a little dough in the meantime. But one thing notice is that vol VXX is not very high either. It's into the 70s. But the Jan cycle's in the 80s and 90s. So, usually the volatility, the term structure tells you a lot of information. And right now, they don't give a damn about December, but they care a lot about January. So as far as that goes, I think it's a difficult D's trade and a more interesting Jan trade as we get closer to that cycle.
You know what? We certainly do give a damn about your questions, though. So without further ado, let's check in on the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys know how to reach out to us at Options, most of the major social media platforms. Questions, theoptioninsider.com. Also works. We have a slew of questions from those outlets. But, of course, if you listen live, we're nice. We kind of bump you to the top of the list, just like Tony here. Tony Weber wants to know the folks on CNBC. Well, that's your first problem, Tony. You're watching CNBC. We can't help you. We only broadcast for a few hours a day, I know, so we can't trump all their stuff. But we try to walk you off the ledge, that is CNBC, whenever possible. But I digress. The folks on CNBC keep citing the increased call buying as a contributing factor to the VIX remaining elevated. I'm assuming you mean SPX, but you've been listening long enough, Tony. You know that. Do you agree with this analysis when VIX eventually drops? So it's, I guess, a related question. When VIX eventually drops, will it drop fast? Or will it take months to draw down? Let's go to the Flowmaster first. Mr. Flowmaster, sir, do you concur with, as he puts it, the folks on CNBC that all this SPX call buying is what's keeping VIX here? And then also, do you, for his second part of his question, do you think when VIX starts moving to the downside, it's going to be just watch out below, sir?
Well, I do agree that this, the call buying, which has certainly been a huge part of the market and a very profitable trade in general, for most of this year, is the reason these vols are staying up here, right? You've got premium buyers that are making money, and so they're going to kind of return and do it again. That said, I think if things become a little bit more normal and maybe the market stops going up 1 or 2% a day, that's going to dry up because it's not going to work as well. And you may see the VIX kind of do a quick, 4 or 5 points to the downside over a couple of weeks. But, I agree with Andrew. It's not going to happen anytime in the short term. I think you're probably looking out, 3-4 months, just because we got to get through the holidays and, what will probably look worse in terms of COVID. But looking at, I was trying to come up with a list before the show, but I didn't finish it. But just looking at some of the vol spikes that we've seen with stocks actually jumping higher, This year the number of vol up, stock up situations, and it does filter into the broad market, into the indexes as well, indirectly, but they pretty much have to do something similar, has been higher than we've seen in a long, long time, right? So, you have names like, yesterday Lemonade popped $15, which was about 20%, and the vol went up 30 points with it, right? And we've seen it happen in Tesla a whole bunch of times. And, that's a funky phenomena. And, some people would say, oh, no, that makes no sense. That's just stupid. Vol doesn't get higher when a stock gets higher. But I've seen some research that actually, if you break out your realized volatility into up moves and run a vol on that versus realized vol for the down moves, you've got a bunch of names that basically are exhibiting higher upside volatility than downside volatility, and that translates into exactly what we're seeing. So it's unusual. We don't usually get that behavior, but that's been the deal this year, certainly since March, and I don't think it's going to happen. It's not going to stay around forever, but it could surprise you. We could get another 3 to 6 months of this.
Well said, sir. Let's keep on rolling here. Used to be on the show a while, hasn't been on in a bit. Good old Ophir Gottlieb over there. He was wondering if 2020 was the largest absolute drop in VIX from the highs to the lows in 1 year, entry year. He wants to know if we agree with him or did he get sloppy. No, I don't think you're sloppy over there, Ophir. I'm pretty sure this is it. Obviously, in recent memory, the only one that comes to mind that could even challenge it is 2018. I'm looking here. This only shows about a 17-point drop from peak to trough there in 2018, which doesn't sound right. Versus a 40-odd point drop here. I don't think that there's something's wrong with this data. I think it was more in 2018. But either way, I do believe you are correct. 2020 this year off the charts for just about everything, including the largest entry year drop from high to low in VIX. Let's go on to this one. Another one up your alley here, Mr. Flowmaster. It kind of gets back to what we were talking about earlier about your grandma trading SPX one lots. This comes from Miguel. Miguel says, have the retail hordes discovered VIX in 2020? Are we seeing the same explosion of one lots out there that we're seeing in the big tech names? Thanks. Well, VIX has always been more retail friendly than, let's say, an SPX, which is why the one lots in SPX are so strange and aberrant. SPX also a big beefy contract. So VIX, from that perspective, has always been a little bit more retail friendly. But Mr. Flowmaster, you keep all the data out there. Have you seen the same explosion of one lots in VIX that we're seeing in some of these other products, sir?
Not quite as much. I mean, you're right. It's not as high notional, so it's a little bit more accessible. But the one thing you got to remember is especially for people trading on a Robinhood account, which I believe is probably making up at least a quarter, if not a third, of this retail explosion. They can't trade indexes. Robinhood doesn't support them. So those guys are not playing the VIX. I did just run average trade size, and I believe that VIX was still kind of in the higher end of the average size. So meaning that it's still more institutional than retail getting in there. I think that retail's still going to keep playing in VXX more because it's easier, it's permitted in a Robinhood kind of account, and it's the behavior is going to be similar.
Anything to add there, Mr. Rock Lobster, about either the one lots here or about Ophir's question, or even about the talking heads on CNBC, sir?
The talking heads on. The talking heads on CNBC, what are they really, what are they saying, those talking heads on CNBC? Okay. I haven't watched it.
Apparently Rick Santelli has just gone off again about something else crazy, so we'll all be debating that for days in a little bit.
So long. What's funny is the 2018 spike, the Volpocalypse, I think we touched 50 briefly intraday, and that was it for 2018. And then when the NASDAQ was melting down in December 2018, only to the 40s, which we thought was huge, right? And I think the reason why it felt so huge because we kept going back to a 12 and then back up to a 40. So that relative move, it was pretty big. So yeah, but I think this year it was the biggest, like peak to trough move for sure. It dwarfed 2018, not even close on that score. Even some of the smaller moves into the 40s and almost 50s. I think we had 3 or 4 of those. Yeah, we had 3 of those moves after the huge spike in 2020, and almost all of those almost dwarfed the 2018 moves, or at least were consistent. And those were just like the little pops that we had while we were trying to deal with COVID-19. So from that point of view, yeah, I think this was a banner year in a lot of ways. From the one lots, I think the one lot people will be here to stay, and they come in and out. Generally, they like to see the market going up to get in here. And they've had plenty of that this year, from the bottom peak to trough. So I don't see why that should change very much at all. So as far as the CNBC talking heads, listen, and when you just, for the average person, if you're looking, if the straddle is expanding, the vol's going up, and straddles can expand on the upside, because the upside is really the thing that really can blow a stock up. I mean, you traded in, Henry's seen plenty of stuff you have where just the vol doesn't, you can keep going up and up and up. And that just, creates a lot of short gamut, a lot of problems, because it doesn't stop, right? Stock that goes from $40 to $100 is much more difficult to manage than one going from 40 to 20. So, you have to, you're trying to think about how that goes, but just this constant expansion of some of these names is just like in 2000, where the vol came from the upside. It wasn't from the downside. So remember, volatility can go both ways. So as long as stocks are going up, vol's going to go up like that. When they go up that strong.
All right. You know what time it is now, listeners. The portion of the show Henry's been sweating about the entire show. Yes, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we prognosticate wildly and indeed recklessly. Last time on the show, I remember I said I wasn't sure if we were going to have a Vol Views on that Friday or not, if we are going to be prognosticating for 2 weeks. It turned out to be the latter, prognosticating for 2 weeks, which makes my prediction look that much more unerringly precise, which was I was at about a 20 double and VIX Cash at about a 20.85 or so. Right now, of course, we are in an interesting spot here, Mr. Rock Lobster. I will give you points because we are in that time of the year where Spikes gets, as Steinman would put it, who's coming back on the show, I believe, next week. I haven't talked to him in a while. The Spikes father himself. But he, as he puts it, it is pregnant with the dividend of SPY. So Spikes actually has that premium. And that is working into your favor right now, Mr. Rock Lobster, because you were at a 21 double, a full point higher than me. And Spikes is at about a 21.5 right now. So we are at a bit of an impasse where technically I win, but yet because you're closer to Spikes, and Spikes is one of our primary indicators here, I may have to tip my cat to you. What do you think? How generous is that, Mr. Rock Lobster?
All I know is I now know that this is the strangest year in history because you are even making a minor concession in the crystal ball.
I mean, you always give me a hard time of what quote I'm using for VIX Cash. So let's just throw that out the window, even though I win there. And we'll go to Spikes, which I do not win on. And so that's how generous I am, sir.
I'll take it. I'll take it. What can I say?
Do you want to go first? Do you want to pick someone else to go first?
I'll tell you what. I will go first, and I will be magnanimous in victory and let everybody else scum me this time. So, as opposed to what usually happens where I scum everybody else. So, I'm looking at what we have as I'm sticking to my original thing. I'm going to take your number. I don't think we're going to see much. I'm going to say 2050 VIX next week.
Look at you. taken my number because it was so gloriously accurate and precise. That's a 2-week prediction, by the way. Let me just put that out there, by the way. That's no mean feat. So Mr. Rock Lobster drawing his line where mine was previously, pretty much, at a 20 half. And I guess I'll be charitable. I could go next, but I'll allow the Flowmaster to go next. Mr. Flowmaster, sir, what are you feeling for VIX and or spikes this time next week?
I'm going to say 22 and a half.
22 and a half. All right. 22 and a half for the Flowmaster. All right. 20 and a half for the Rock Lobster. 22 and a half, 2 points north for the Flowmaster, which makes things interesting. I did kind of like where I was this time last week. I could see a little bit of juice trickling back in. So I'm actually going to almost not quite flop with the Rock Lobster, switch with the Rock Lobster, but get a little bit closer. I'm going to say for myself this time next week, 21 and a quarter. We're just in that weird spot where, as even the Rock Lobster alluded to earlier, they're not going to let it get that much farther down. And I could see some things pop. Maybe some of these trials don't go well or something else. Distribution is already proving to be an issue. Something along those lines could keep us a little bit more juicy. So that's our market next week, listeners. The Rock Lobster on the bottom, 20 and a half. Me at 21 and a quarter. And the Flowmaster all the way to the upside there at 22 and a half. All right. Unfortunately, that music means we've come to the end of an epic journey through the world of volatility yet again. What do we talk about? Just about everything. Spikes, VIX, the futures, the options, the underlyings, your grandma out there trading SPX, one lots, VXX, all your questions about the talking heads out there and everything else out there. It's a volatility palooza, to use a technical term out there. Hope you guys enjoyed. Remember, you like what you hear, keep those reviews coming. Keeps new folks discovering. We love seeing new faces and new names and people in the chat all the time. It really makes it fun out there. So keep that love coming wherever you're listening. And before we go, let's go back around the horn. Mr. Flowmaster did an able job, as usual, in our hot seat, sir. If folks are intrigued, they want to kick the tires over there in the land of Trade Alert, where should they go? What should they do?
Come to trade-alert.com, and we're happy to set people up with trials. And actually, another place you should be keeping an eye on is datashop.cbo.com, because we're actually starting to get some of our historical content into the data shop, and it's really a pretty amazing place to pick up data. Sometimes I think the prices are ridiculously low, because you can pick up trade history on something like Apple or Tesla for a month for I think it's about $20, which is a lot of data.
Check it out. I can't recommend it highly enough. We do use it all the time. I was joking about using it even more. We did use it more today on the old VolView show, but we do use it all the time here on the network. So Trade Alert, it's literally your one-stop shop for everything options flow. That's why we call him the Flowmaster. Check it out, Trade Alert listeners. You literally can't go wrong. It's got all the data. So you have those questions about one lots, you can go type it in for yourself and see the average size, all that other good stuff. By the way, we did our crystal ball, but you guys can play along too. We love getting your prognostications. So I know a bunch of them have already come in. We got some like live chat. We got Mr. Unlimited at 1989, so feeling a little bit of the fade, even below Mr. Andrew there, which is kind of interesting. So if you guys have your prognostications, hit us up. You know where to find us. And Mr. Rock Lobster, if folks want to find you, get some vol learning on, maybe talk to Vol Man himself. Where should they go? What should they do?
You go to optionpit.com. Again, take a look at our products, the members page. Also, Henry does have some fine data over there at the SIBO, and I do like his Trade Alert products, lovely product. So if you want to see the flow, and I have to say it's been great for us at Option Pit. So anyway, unsolicited plug, but come on over to optionpit.com and get if you want to learn how to trade options, come see us. We'll teach you market maker tricks, and that helps.
Get your tricks on. Get tricky over there at Option Pit. And you know where to go to get all the great spikes data, myxoptions.com/spikes. It's got your historical data. It's got your press releases. So all of you asking when the futures are coming back, stay glued to that page. You'll know pretty much before anyone. It's got your current spikes quotes, a cool little 2-minute video showing you what the heck spikes is. And guess what? Even a link to a cool show called Volatility Views. What more could you possibly ask for? From a volatility destination, myxoptions.com/spikes. And of course, this show also brought to you by our friends over there at Matrix Executions. They're an agency broker dealer focused on best X and trading workflow automation. A tech-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions. For options markets, Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. More info available over there at matrixexecutions.com. And on behalf of the Flowmaster and the Rock Lobster and our friends over there at MyX and at Matrix, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MyX, one of the fastest options platforms in the world. MyX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.myxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.